Welcome to another edition of Homebuyer University. I'm Dominic Villa.
And I'm Andrew Montero. And today we're going to be talking about work history and how it affects your mortgage pre-approval. It's super common to hear, we need 2 years, 24 months on your job. Does it need to be the same job? There's a lot of questions around our work history. So Dom, can you give us some insight into this?
Yeah, let's get a little clarification. Like you said, most people come to us assuming that they need 2 years on their current job. And that's not really the case. So let's dive into some of the differences in work types and what type of history you need in order to get approved for a loan. All right, let's start with the easy one. Say you're a full-time W-2 employee. Do you need to be on your job for 2 years? The answer is no. You technically don't even have to be on your job for more than a week. What you do have to have, though, is a 2-year work history. Ideally, it's within the same industry, but it doesn't need to be at the same company, the same role, or the same position. So don't think that a new job is going to set you back from diving in and buying a house. Now, what if you're a student and you just graduated and you just got a job? Do you have to wait 2 years before you buy?
Technically, no. Your education, your school transcripts, especially showing that you've been training for a major or your job that you're currently in, actually does count.
All right, so that means you do not have to wait 2 years before you buy. So don't think a job change negates you from getting in and getting approved for a mortgage.
Let's talk about if you maybe had a gap in your employment. You had kids, you took some type of leave, medical or not, or you just took some time off of work and traveled. What now?
Good question. So depending on that gap and how big it is, the answer could be different. If you have a gap of under 6 months, most loan programs are cool with you having a gap that size as long as you have full-time W-2 employment. However, if that gap is longer than that, it really depends. They might have you be on your new job for 30 days or more before you're approved for a loan because they want to establish that you're starting work in a cohesive and sustainable format again. And because there was a large gap, we need to show them that we're back in the workforce full force.
Now, what if you're self-employed?
Oh, this definitely gets to be a bit more nuanced. So typically, what the whole entire mortgage industry looks at for, we'll call them standard loans, like conventional, FHA, VA, and USDA, is they want a 2-year history of being self-employed. Now, the reason behind that is you're essentially running your own business, and they want to see that you have some history running that business. And they've determined that 2 years of history is what they'd like to see. So unlike a W-2 full-time employee, when you're running your own business, they want to see that you've successfully done that for 2 years before they give you a bunch of money to buy a house.
Is that 2-year tax return history absolutely mandatory?
For most government-backed loans, yes. However, there are alternative programs out there that can potentially be a bit more flexible on how long you've been self-employed. But the caveat is oftentimes the rates, terms, or even down payment requirements aren't going to be as friendly.
To recap, you don't really need 2 years at your current job.
No, you don't need 2 years at your current job or your current role, but they do like to see 2 years of work history. Now that work history can come from school, other jobs, tax returns. There's a lot of ways to build that history. So don't feel like you need to be at your current job for a full 2 years before you think about buying.